what did you write? You can write 100 pages about it.
Yes, that's a master's thesis, if not a PhD.
Yeah, maybe something comes out of the podcast. DC, it's good to have you back. I started the live streaming, so I hope that's fine with you. It should be live in a few seconds on LinkedIn. Yeah, here we go. It works. It's always interesting to see what technology can do these days. When I think back 10 years, it was not possible.
Oh, absolutely. Yes. WebEx and GoToMeeting. And yeah, I spent a lot of time on those. And well, it's a different world nowadays.
You remember those go-to-meeting days?
Oh, absolutely. Yes. They were our customers because I made networking equipment and network simulators.
Ah,
And all the people who made this sort of video conferencing solutions needed a way of simulating different networks. So we provide the equipment for them.
yeah,
And
that's
then we use
amazing.
them for our own customer demonstrations.
Yeah, we had GoToMeeting. I was working at a biotech company back then, and it was
Hmm.
from 2008 to 2014, 15-ish. It was a
Right.
Canadian company that relocated to Austria, and
Hmm.
we used GoToMeeting, but it was not even close to today's convenient use with Zoom or with Microsoft
Yes.
Teams.
Yep.
And you are back in your Japanese house.
Oh yes. So welcome to my tea house. This is not a fake background. This is a real background here. I
Yeah.
can knock on the wall here and nothing disappears. This is my wife's tea ceremony teaching room where she teaches Japanese tea ceremony, and I use it for my podcasting or whenever I want to get out of my my boring little office.
That's a good idea. I think your wife was also part of your first book or the tea ceremony, when I remember it right, about
Tea ceremony
killing.
was in there. It's not my wife because the mother in the story was a very difficult person, and my wife is not.
So it was not inspired by your wife.
No, no, but obviously I pulled some of the tea ceremony from kind of my experience here and how it's very rigid and that fit that character.
Yeah, and in your new book, I started reading it. I'm about 10% in the story. It's I hope it works on my Kindle. It's Countdown to Decryption.
Ah, countdown to decryption! Yay! Thank you. I hope you're enjoying it. My
Yes,
new
I do.
book.
And after starting reading it, I thought this will be a deadly serious episode today because in the first chapter you already killed Joy.
Oh yes, yes. The joy is dead. The end of joy.
Yeah, that was
What a real
was
killjoy.
so you really jump right into the action with your book.
Yeah, well, that is kind of the way you need to write books nowadays. That's what writers expect. You have to grab them by the throat and pull them in, or in today's very we're used to everything happening very quickly. So you got to get to the action right away, one way or another.
Having said that, let's get to the action with the podcast. We come back
Yes,
to your
let's do
book
that.
later in the podcast. Let me
Sounds
ask,
good.
I, sta- I want to get into the habits of starting each live stream recording with what the speaker can expect. So I have a few
Hmm.
questions around that. What are
Yep.
the top three outcomes that you hope to achieve through this podcast appearance?
All right. So, I spent a lot of my time mentoring startups and investing in startups, particularly in climate tech space, and we're going to be talking about that. And kind of my overriding concern, and the reason I've written about 200 articles that you can find online, is so that startup founders have a better idea of what investors are looking for. Because startup founders are over here and they're trying to put together pitch decks, and somebody gives them a template and they put it together and they take it to investors, and investors kind of like, yeah, sorry, no. So the founders need to understand, what are investors looking for? Why are they looking for it? What does the pitch need to be? And it's not just a template. There's a flow to it. So I want people to come away. That's kind of the most important thing I want people to come away from this call from. Second is one specifically talk about climate tech space and hard tech, because hard tech is really, really hard. And I have a lot of respect for the people who are doing it, and I want to help them, but I also want them to understand what it takes and how to navigate the space, because it's a little bit different from doing a software startup. And then last, we already started talking about it. I want people to hear about my new novel about Silicon Valley and startup world, and hopefully enjoy that.
Yeah, I'm happy that you didn't destroy Silicon Valley in your book. So it was
Yes, haven't blown it up yet. Maybe that'll be the next book where AI will take over the world.
how
Actually, I
would
started working on that book.
oh
It's
really?
about a this is first announced here on your podcast. I'm working on another novel. I just started it about a toaster
Mhm.
um, that suddenly becomes sentient and it thinks it's God and it wants to tell people humans how to live. And obviously, it's all about Chat GPT and we think it's going to be like you know. Like in Terminator, where it's going to be these robots that are just going to take over the world. But no, no, it's going to be the refrigerators and the toasters that are going to take over the world.
So is it more like a comedy or is it more like a philosophical book or something in between?
It's a fun book. It's more farcical, more crazy, a lot of religion, a lot of understanding about the AI world in Silicon Valley.
So if Hollywood makes it into a movie, you have to ask Arnold Schwarzenegger to star in that
Yes,
movie
yes,
and
yes. He
play
can
the
play the
toaster.
toaster. It'll be a really strong toaster.
This would be fun to watch. Yeah, it's interesting, this artificial intelligence evolution. Some people I heard, I think on Lex Friedman podcast, Elon Musk and people like that, they talk very often about an intelligent life form, an intelligent
Hmm.
artificial life form. I see it more as a tool. I see it more as a tool. What's your opinion
Absolutely.
about that?
Yes. No, I agree with you completely. And I think we may get into this a little bit later, but when I started in angel investing about 10 years ago, I saw a lot of pitches for SaaS and software as a service, and it was a new business model, and everyone was like, well, let's convert this business to SaaS, and let's convert this business to SaaS, and let's convert this business to SaaS. And it got kind of boring, SaaS for everything, SaaS for bowling alley operations, SaaS for ordering, toy cars, whatever. It was SaaS for everything. And then suddenly blockchain came out of nowhere. It was blockchain for this and blockchain for that. And blockchain was going to take over the world. And I kept thinking, you know, chain is a tool. It is a database. And I don't really care whether you solve the problem with a distributed database or a centralized database, whatever works. And there's probably some solutions, some problems that you can solve with a distributed database. But don't pitch me about blockchain. Pitch me about what problem you're solving, and it just happens you're using a distributed database for it. Now it's AI. Every pitch we hear is AI for this, AI for that. And again, unless you're pitching, OpenAI or Anthropic or one of the other actual AI providers or internal AI tools, um, which is a little bit different, all of these are applications, and it's using AI as a way to solve a problem. And I really don't care whether you use AI or heuristics, or you have mice in the background that are running on little hamster wheels to get you your answers. It doesn't matter. It's a tool. It's a programming model. It's a shortcut to a programming model where you just say, "Hey, computer, you figure it out yourself." And there's things that work better that way than where the heuristics aren't going to be solvable. But I don't care. What I care is that you have a problem that can be solved, and this is just a tool to do it with.
Yeah, I couldn't agree more. You're an angel investor in or close to Silicon Valley in Los Angeles. And from the Austrian perspective, it's next to Silicon Valley. From your perspective, probably it's a little bit larger. Uh,
Yeah.
how do you see your role these days in 2024 as an angel investor impacting the startup ecosystem in the United States?
So first, I do need to clarify, like you said, from Austria, Los Angeles and San Francisco are probably like right next to each other, but it's actually a 6-hour drive away. So it's quite a distance, and it's a different world. So I'm in Los Angeles. We are the entertainment capital of the world. Everyone I know is in entertainment one way or another. The lawyers do entertainment law. The writers do script writing. And a lot of the startups in this space are focused on things um, like advertising, right? Or influencers, and very different from what you find in Silicon Valley, which is actually quite different from what you would find in San Francisco. So we're a different ecosystem. And I'm a lot more in tune to Silicon Valley than I am to Los Angeles because I'm a hard tech person. I come from an IT background and and a Climatech interest. And Climatech's all over the country, but IT in particular is based up in Silicon Valley. So LA, Los Angeles tends to be a lot more consumer focused or ad tech marketing focused, which don't really excite me. So I see those pitches and I'm like, great, where's the Climatech pitches? So that said, when you get into Climatech in particular, there isn't that kind of nexus of everything being concentrated in one place, the same way as you find. So IT is in, San Jose, Silicon Valley. All the software like Facebook is in San Francisco. Climatech is all over the country and all over the world. We see a lot of great startups coming out of places like Europe in particular. I think is ahead of the US, at least in the early stages. So my role then is like, how do I get involved in them? How do I mentor the startups so that they are ready for investment, so they understand what investors need? And, a lot of the founders, especially the ones that are talking to mentors like me, don't have a lot of startup experience, don't have a lot of business experience. It's often PhDs in research. They brilliant people, but they don't understand how to talk to customers. They don't understand how to business. They don't understand accounting. So when investors ask them, is that accrual-based revenues or is that cash-based revenues? They scratch their heads, and investors who tend to be finance people say, yeah, okay, you don't understand anything. So I try to be that person in the middle that is helping the startups kind of understand how to build a business instead of just do research and then build a product. So, and then that goes from the mentorship to the investing. I'm obviously, I do two kinds of investing, actually, I should be clear. So ones where I'm serious about this making money, I do not invest as an individual. I just don't have the amount of time it takes to really do the diligence to go into all of the details of the company. I don't have the time. I don't have the expertise. I know my section. So I work within an angel group, and in two different angel groups. One is Tech Coast Angels, or TCA Venture Group, which is focused on startups in the LA ecosystem. And then another group called Chemical Angels, which is focused on startups in the chemistry and materials innovation area, both in climate tech and in life sciences. And so if a company comes to me and they're looking for serious investment, I say, come to my groups. There's 400 people in one group. There's 70 people in the other group. A lot of expertise, and really looking for a team that can dive into all of the details, spend time on it, figure out everything that needs to be figured out. And then I can say, yeah, okay, I have the confidence that this is a good investment with good terms, with good prospects. That said, I do come across a lot of startups that are not ready for that, and they'll pitch to the groups, and the group will say, "Sorry, you're too early. You don't have customer validation yet." So, in some cases, it's not people who are just reaching out to me on LinkedIn. Sorry, all those people listening on LinkedIn are just like, "Hey, DC, I got a great story for you," and I get a lot of those every day. It is companies that I've been involved in some way. As a mentor, as a CMO, but I have some sort of inside information that I know that this company is operating well, does have the right prospects, even though they don't know how to pitch that to investors yet. They're at the stage where, at least I have some confidence from kind of inside information, which is perfectly legal in investing in a startup, that these look, like this looks like a good investment at a very early stage of low valuation. And even then, it's very high risk, so I won't put in very much. So those are kind of, it's not quite friends and family, but it's not serious angel investing yet either. So I have that middle stage where I'm one of the people in the network who will invest a small amount at the early stage to help them get to that next stage. And those are different. I'm not going to spend as much time in it on it. I'm not going to worry as much about is that a 10x return or a 50x return? But I'm also not going to invest as much because I have to assume that it's going to fail, unfortunately.
You have different hats as far as I remember
Yep.
and understood from your explanation now. On one hand, you're investing with your angel group. On the other
Yes.
hand, you also go in earlier when you have a role or when you had a role in the company. So you are not a full-time angel investor, basically. So you're
That's
also.
correct. Yeah, and most angel investors are not full-time angel investors. A lot of people have full-time jobs and they're doing this, nights and weekends. Some people are retired. Some people have jobs that have flexibility that they can do, like lawyers are really good, right? You can be a lawyer, you can work whatever out, not a corporate lawyer, but your own practice. You can work at nights and you can work on weekends, so you can meet with startups during the day. Um, some people will do it as part of their jobs. But there aren't many people that are full-time angel investors because it's very difficult to make money as an angel investor. And even if you're lucky, it's 10 to 15 years before you get a return. So you need other income or need to be retired. So I'm kind of in the middle. I do some fractional chief marketing officer work. I do some angel investing. I do some mentoring, some of which pays, some of which doesn't pay. And then I'm also a writer, some of which pays and some of which doesn't pay. And then, I'm very fortunate that I've had some startups that have been successful, so I don't need to worry about, paying my mortgage today. So I can be flexible about what I spend my time on.
So on one hand, you have your investments as an angel investor. On the other hand, you also have some sort of service income, service fees as a fractional CMO,
Yeah.
as a mentor, as a coach, helping people to straighten out their pitches, for example. Can you shine a little bit more light on some pivotal moments in your career that led you to become a startup founder and a fractional CMO?
Yeah, that's a really good question because I'm not your traditional startup founder. I'm a pretty conservative guy. I'm not a huge risk taker. I'm not one of the people who went to college and said, I want to start a startup. And in fact, when I went to college in the 1980s, nobody had even heard the word startup. There were, the VCs were investing in Intel. They weren't investing in unknowns. So the world's changed a lot. But even then, I went to school. I assumed I was going to work as an engineer in a big company, work my way up engineering management, and then I'd be, president or CEO of General Motors or something like that. And along the way, I worked at General Motors and I hated it. Then I worked at Honeywell and I hated it. And I escaped. I went to Japan and I worked for a Japanese company and I loved it. It was a big Japanese company, it was a steel company, but the main thing that was different is that the companies in Japan, and it's starting to change there too, but it's very different from here. Here, you have a job, you get paid to get your job done. At the end of your 8 hours, your job is finished, you go home. And in fact, in Europe, you're not even allowed to work past those 8 hours, right? So it's very, what's the right term? You get paid for your time one way or another, whether that's a monthly salary or an hourly salary. And when they don't need you anymore, you're gone. When you don't need them anymore, when there's something interesting, you leave. Japan is very much you join a company when you're out of school, you stay there for most of your career. They take care of you. You're part of the team. Everyone is very professional. Everyone is working as part of the team for the team success, for the company success. And I really enjoyed that. It was very different. And I felt, a sense of belonging. I felt a sense of pride in accomplishments. So I love that. But after a while, I said, I don't want to be doing engineering all day, every day. I was getting kind of bored and I'm not Japanese, obviously. So I needed to figure out what my career path was going to be. So I decided I wanted to be on the business side of technology. I love technology, but I didn't love sitting there all day running one model after another model after another model for months on end. That got boring. I like wearing lots of hats. So I went back, got a master's degree, not in entrepreneurship, like all my colleagues, but in technology marketing, so I could be on the business side of technology. And when I graduated, all the interesting jobs were at startups. This was the 1990s. This was the dot-com bubble. And so I joined a startup doing computer networking. And wow, I loved it. There were 7 engineers and there was me. And I was the person in charge of the business side of things. And I had to figure it out. I didn't know anything about the computer networking space. I didn't know anything, I was an energy engineer. Didn't really know anything about sales or marketing other than what they taught you at school. So I had to figure it out. And every day was a different challenge. And I loved it. And we were a small team of, 7, 8, 10, and then up to 20 people. We pivoted. We had new products come out. Customers told us what they wanted. We came out with it, and lo and behold, all the other customers wanted it too. So it was great. Um, and I really enjoyed that environment. The small company, the everybody pulling together is like Japan. Only if you're successful, you actually do really well. Wow. Okay, this is great. So when that company was acquired, I wasn't going to go work for a big company. So I said, okay, it's time to do my own startups. I did my own startup after that, and I already had a team, already knew what customers needed. And so it was just kind of a progression that was accidental from the beginning. Um, and so, it's and then that took me into angel investing because I was part of the startup ecosystem. I wanted to support other startups in the ecosystem. I wanted to help other founders get started, and I also wanted to keep my eye on what else was going on in the startup ecosystem, because you never know when you might find something interesting, useful to you, useful as an investment, or possibly next opportunity. So became involved in angel investing and very quickly saw what investors were looking for and what the startups were pitching were worlds apart. So that got me saying, I need to be that person in the middle that can help the startups really understand what investors are looking for. And I've been doing that for 10 years with my writing and my marketing and my pitch deck assistance and things like that.
You mentioned that in the 90s you started a startup. Was the term startup in California
No,
already
no,
popular?
nobody called it a startup. We didn't use that
Yeah.
term. It wasn't a venture investment. It was a small business. It was we started off as kind of we call ourselves a consulting business, but it was we made networking software that we licensed to the big computer manufacturers, and the idea was to reuse as much of it as possible for each customer. So it didn't fit the startup business model. It wasn't, we're going to be $100 million and be acquired very quickly. But we ended up, customers said, well, we need something that makes the network faster. And we built that. And suddenly there were, 10,000 customers who wanted it. So we got pulled into what was a kind of typical venture model. And it turns out our competitors were all venture backed. And so we had to figure out that world pretty quickly. But again, every day was another adventure, another thing to figure out, and that's what I really enjoy.
Yeah, venture capital was popular already in the 90s, 70s, and 80s in California, I guess.
Uh, I think it started in the 90s where it got big with the dot-com bubble. Was, before that it was very specialized. It was people like, the founders of Intel looking for money to build a new kind of chip. Apple came out of venture capital, but it was very niche. It was very specialized. You had to know people, and it was very concentrated in Silicon Valley. So that's changed. Now it's everywhere in the world. Now there's a million
Not in
VCs with
Europe.
their yeah, and it's in Europe, it's in India, it's in Africa, it's everywhere now.
I asked Sebastian Malaby when he was on my podcast. He wrote the book The Power Law.
Uh-huh.
It's basically, I call it the history of venture capital, and he
Ah,
writes a lot about the United States and a lot
right.
about Southeast Asia and China.
Yep.
And I asked
Yep.
him, why didn't you write anything about Europe in your book? And he said, yeah, because there
Uh,
is no venture capital. So
well, that's very dismissive. That's and absolutely not true.
he's
But
he's British,
I
so
think it's a
he's
little bit
allowed to.
different. I think it has it's and so I'm not an expert on European venture capital, but I've run across a few of them, and it feels more conservative. Um, a lot of it is corporate venture capital. The ones that aren't kind of have that corporate attitude of we want to invest in B round, we want to invest in C round, we want to invest when the company's already expanding and we have lots of money, we can help them. But then there's companies like Shell and BASF and probably a lot of the consumer companies that also are working with startups to help them get started. So yeah, it's a little bit more conservative than the US and kind of investing a little bit later, but not really very much different. So maybe you didn't write about it because it just wasn't very exciting because it really isn't all that much different. It's just
Yeah,
smaller.
there's a lot of venture capital in the early stages in Europe, but there is a huge
Yeah,
gap in the later stages, especially from
yeah,
Series A onwards. I think it's in all industries, it's really difficult
right,
to get funded. The traditional way for Europeans is either to
right,
look for an acquisition, hoping
right.
that a big company buys them early, or to move to the United States.
Yeah.
Or
So
also,
so I've got it backwards. I think you're right that the big money is in the US in the private equity, and it's money that's come from all over the world. So it's not
yeah,
just American money, but the industry is here. The venture capital companies are here, and some of them will invest in Europe, but most of them it's easier to get investment if you're in the US. And so that's like you said, that's where the big money is. And at that point, you're probably, I mean, you have to have a worldwide operation already for most things, unless you're doing like food delivery. If you're doing anything climate tech or life sciences, you need to be worldwide. So where you're based really doesn't matter all that much.
so you guys did an incredible job selling the S&P 500 ETFs globally, and I think it's just like
Hmm.
a waterfall. People, all I think most of the world, most of the financial
Yes,
world buys S&P 500 ETFs. They provide the fuel
yes,
basically for venture capitalists to make money. So
yeah,
the big stories end somewhere in the S&P 500, and then it's just pulls down, I think, trickles down to the early stage fund in your ecosystem.
right.
You describe yourself as a conservative person. What
Hmm.
attracted you to become a business angel? I mean, investing in startups is anything but conservative, I think.
Yeah, yeah, it is, and you're completely right. But um, it's interesting and it's exciting, and so for my public investments, my methodology is pretty simple. I take half of it and I put it into S&P 500. And I think, okay, that's kind of the conservative thing to do. And I take the other half and I say, I'm going to put it into things that I feel like I know more than the other investors. And it's things tends to be the tech industry, or maybe it's some product my wife likes, and I'm like, okay, she thinks this is great, then they're going to take off or something like that. In the end, the S&P 500 is better than those ones, um, but they haven't done bad, and I've had some good successes there. So I do the same thing when it comes to my angel investments. I say, I'm not angel investing for just the point of angel investing. I'm not a VC, right? And VC is getting paid to invest other people's money for big funds. I'm doing this because I want to do it, and I'm going to invest in things that I want to invest in. And in the same way, our angel groups have member funds, and I'll put some of my money into the member funds. And if the other members think it's great, whether I'm interested or not, wonderful, great, okay, they've done the work, they think this is wonderful, and I hope they're successful. I'll take the other half and I'll say, okay, now I'm going to invest in things that get me excited. They're going to get me excited on the business side. They're going to get me excited on the technology side. So, or they're going to get me excited on the industry side because they're in an industry like Climatetech, where I feel like I know more than the other people, and therefore I can judge a good investment better than other people. I may be wrong most of the time, but it'll take me 10 years to find out. So at least for 10 years, I can feel like I'm investing in things that other people are missing, and hopefully they'll be successful. So ask me again in 10 years whether I turned out doing better than other investors.
You graduated in the 80s, started working on a traditional career path,
Yes.
got in touch with the startup ecosystem in the 90s and also with venture funds, then worked yourself up to 2024. When you look at your experience, and we switch now the conversation to pitching, these days, what are the biggest challenges, in your opinion, you see for founders today in 2024?
So this year in particular is kind of a transition year. We had a big bubble during COVID, and then we kind of had a little bit of a crash, and now we're kind of coming back. So the startup environment is a little messy right now, and nobody's quite sure whether it's going up or going down. There's more investment, but it's at lower valuations. It's slower than it was before, but it was faster than last year. So everyone's kind of in a little state of flux of what's going on, and for founders that's really frustrating because you've got 18 months, you've got enough funding for 18 months hopefully, and now your 18 months are up and you need more money, and you go back to the VCs who said, okay, as soon as you meet, you get to 1 million ARR, we'll invest $5 million in your business. And you go back to them and then they say, oh no, now we're looking for companies that have at least 3 million ARR. They're like, but I'm out of money now. You promised me you were going to invest when we got to 1 million ARR. It's like, well, it's not a promise. That is, that was our metrics then, and our metrics have changed. And come back again when you're at 3 million. So it's a tough environment for startups. I have to go back to the earlier investors and say, can you put in more so we can get to these new milestones? And that's everyone in the startup world. So there's a lot of bridge rounds, there's a lot of down rounds right now. So there's a lot of frustration from founders. New founders are finding all of the money's going into early stages, going into those supporting the earlier ones, so they're having trouble getting funded. So there's a lot of frustration, but investors are coming back. It's slowly. There's we're still investing more than we did in the past couple of years. So it's a reasonable environment. But if they got started in 2020 and they thought, oh yeah, I just need to do a pitch deck and people are going to throw money at you, that is gone, right? So we're kind of back to 2018. Climatetech, where I know the most, is always been a challenging space. And despite this being, the climate change crisis being probably, I will say, the defining problem of our era, it's tough for investment because it's hard tech, and hard tech is tough. And we can divide it into life sciences and climate tech, and life science is so much easier than climate tech. And life science isn't easy, but life science is about the science, right? If you have something that works and you have some sort of clinical trials, or even kind of pre-trials, you have studies in mice or pigs or something like that. That's enough to get started to say we've got something and it works, and now it's just a matter of getting through series, clinical trial, what is it, CBA, get our FDA approval, and then somebody's going to buy us for $5 billion. Wonderful. That's easy. All I need to do as an investor is look at the science. Does the science work? That's what I'm betting on. But that's a world I don't know, so I can't invest in that, right? So I leave that to the doctors and the chemists and the people who know that space, because I can't evaluate that science. When it comes to climate tech, we have all of the issues of building a non-life sciences startup. You have to build a product. You have to get the product to market. Then you have to beat the competition. Then you have to grow the business. So you're going to have to, you have to build a sales team. You're going to have a go-to-market strategy. You're going to have to do advertising. You're going to have to deal with supply chain. You're going to have to get to 100 million in sales, and then you're going to have to find somebody that acquires the business, which nobody knows who that is in climate tech yet. So life sciences is easy. If you have a pharmaceutical product and it works, and you get FDA approval or European Union approval, one of the big pharmaceutical companies is going to buy you, and they're going to buy you for a large amount because drugs are so valuable. If you have a great battery, no one knows, is Tesla going to buy you? Probably not. Is Panasonic or LG going to buy you? Maybe not. Probably not for a big, not for a big multiple. So you have to build the business, but you're going to need a lot of money to build the business. And nobody wants to give you the money until you've already proven the business. So you've got all of the challenges of building a software business, but then you've also got to deal with supply chain. You've got to deal with warranties. You've got to deal with hardware. You've got to deal with the fact that something is broken or doesn't work. That's 6 months to fix instead of 2 days of rewriting a piece of code. So it's really tough. And investors look at it and say, well, that's really tough. I'd rather, if I'm looking for a good investment, I'd rather invest in software, or I'd rather invest in life sciences. So everybody knows that this is a huge challenge and that climate change is the defining problem of our era, but no one has figured out what the business model for startups in this space is going to be. So that's where I see the biggest challenge, and it's really frustrating for everybody. And the startups are like, well, I've just invented this great new battery. Why won't people give me $10 million? And investors say, well, you've tested something in the lab that kind of works, and it's going to take you $10 million just to prove that the customers are interested in it. Come back to me when customers are interested. And so kind of bridging that gap. And that's not even the valley of death, which is the next stage. So this is like the pit of hell that founders have to go through to get to customer validation. And every startup when they pitch to me as a mentor, and I'm in some mentorship programs, so sometimes I'll talk to 5-10 companies a day, as one after another, they're early stage founders, they're looking to get investment. They all say, well, we're looking to raise $2 million or $5 million to build our product. And I have to tell them, look, sorry, investors are looking for finished products. And then every single one of them says, okay, then what do we do? How do we get the money we need to get to that next stage? And that's not a simple answer. That is a bunch of different things. It means being scrappy. It means not raising $5 million. It'd be nice if you could raise $5 million. If you can do it, great. Most startups are going to find that that's not going to be possible. So how much do you really need, not to get to here, but to get to that next major milestone where you can talk to the next group of investors? So can you get by with 500K or like 750K? Can I find investors that are not really just looking at this as an investment, but are looking for something that solves a problem? And those are not going to be the people who are on the web saying, I'm an angel investor, I'm a VC. Those are going to be people who are executives at the big companies that use the product. These are going to be founders at other companies that exited, that have some extra time and money and want to work with startups in this space. Some of these are going to become mentors. Some of these are going to become customers. Some of these may potentially become investors. So you need to talk to them, but that's not going to be a lot of money. These are not VCs writing $2 million checks. These are individuals writing 10K checks. Fortunately, we have a great program in the US. I don't know, Europe is kind of split, different places have different things, and I don't know if it's as structured, but in the US, we have something called the SBIR. I don't even remember what it stands for. So it's Small Business Innovation Research or something like that. This is grants, money from the government, $1.25 million for each grant, and you can get multiple grants to take your technology for different applications. That is where, if you're in life sciences or hard tech, that's the place to start. That is money to help you develop the product, to help commercialize the product before taking it to investors. So I always look for, have you gotten as much grants as you possibly can? Have you gotten $1.25 million? Have you gotten $5 million to build the product, instead of looking to investors to do that? You can also talk to suppliers and customers. And some of them are going to say, yes, if this works, this is going to revolutionize my business. It solves a huge problem for me. Yeah, I can throw in 100K right now to invest. And more importantly, I want to work with you on that pilot program. Same thing, suppliers may say, if this works, I'm going to be selling $10 million a year of my chemicals. I want you to succeed. I want to be your partner. I can give you 100K right now, or probably I'm not going to give you cash. I'm not going to give you investment, but I can give you free chemicals. I can give you the chemicals at cost, and I can work with you on the pilot program. I can give you some expertise you don't have. So it's really about building up this kind of your own ecosystem of grants and small investors and mentors and customers and partners, and really being scrappy and trying to find enough to get you to that next stage. Because if you're just going to be pitching VCs with your great idea, you're not going to get very far.
You tackled two big areas. One is pitching to VCs,
Yes.
and the other one is climate change. Can we start first with the founder part and with the VC part, and then move to the urgency of climate change? You mentioned that these days venture capital is scarce, which is quite surprising because I think the best time to invest is when the market is down. Especially in these times, I think pitching the right way to investors is key to success. And you see, I think every year, through your angel groups, a couple of hundred pitches. What are the most common mistakes, in your opinion, that founders make when pitching to investors?
Okay, so I'll give you the number one mistake. And it is especially true for hard tech people because you get scientists in the room instead of salespeople and marketing people. And they tell you in a lot of detail how wonderful their product is, how wonderful their invention is. And it is. The problem is I'm not investing in an invention. I'm not investing in technology. I'm not even investing in a business. I'm buying stock in a company that at some point is going to be acquired or do an IPO. And 99% of the time it's being acquired. So we'll talk about being acquired. So if I'm putting my money in, you got to tell me how I'm going to get the money out, because it's not like a public stock. I can buy Apple stock. If it goes down, I can sell it. If it goes up and I make profit, I can sell it. I can trade it. I can do whatever I want with it. And they pay a dividend. So I get some cash along the way. Startup doesn't work that way. Startup, I put the money in and it is gone. I'm just a number on the cap table, which is a line in an Excel spreadsheet saying I own this much amount of the business. What do I get from that other than the satisfaction of being able to come on your podcast and say I invested in this company? Nothing, until that company is acquired. And then it needs to be acquired for a large multiple of what I put in. 90% of the companies I invest in, that's the usual number that everybody talks about. So half of them will fail outright. Another 40% you'll get your money back, which after 10 years means you've really lost your money. And one of them will be a success if you're doing well. And so I need that one to be a great success. When we pitch to investors, don't tell me why you have a great product. Don't tell me why this solves a big need. Well, you have to tell me those things. But what you need to do is to tell me a story of how a huge need with a great solution that nobody else has is going to get to a $100 million business that some industry giant is going to acquire for a large amount of money 5 years from now, 7 years from now. And then I will get a nice return from that. That's going to be huge. It'll make up for all my other losses. That is a good pitch. And it's pretty rare that early stage startups give that pitch. They always want to tell me how wonderful their product is. I'm like, okay, nice product. but what's in it for me as an investor? And I'm investing to make money. I'm investing to make up for all of the losses that I made in my other investments. So that's the number one mistake I see. It was the second one, but I'm kind of blanking. So let's just go on.
Yeah, it's interesting that understanding the need of the person you pitch. I mean, it's a typical sales problem, isn't it?
Right. Yeah. So you got to put on your sales hat. Everybody thinks I'm talking to investors. They love products. They want to invest in products. They're like, no, we are buying stock in your business. And you got to put on your sales hat, even if that's not a natural for you. I'm not a natural salesperson, but you got to put on your sales hat and say, I'm selling something. And I'm not selling my technology. I'm not selling my products. I am selling stock in my business. Now, why is somebody going to buy stock in my business? Because that stock is going to be worth more at some point, and they're going to get a return from it. So that is what you are selling, is stock in your business. So sell me on the stock in your business and why that's going to be a great thing for me to buy.
I think this is one crucial lesson for founders, that investors want to make money. It doesn't matter if it's a business angel
yes.
or a venture
Shocking,
capitalist.
isn't it?
Big surprise, big surprise. But I think
Yes,
it's not common, not common knowledge in the startup
yes,
world. I think still not.
that's right. They just kind of I don't know what most founders are thinking other than, well, there's people with money whose job it is to invest in great products. And it's like, no, the VCs are getting paid based on, they get bonuses based on how much money they make for their investors. And so they need to make money. Angel investors, well, this is our retirement funds. And, I have a choice, right? I can buy a new car, or I can invest in your business. I can take my wife on a cruise of the Mediterranean, or I can go to Austria and have fun and go see you. Um, or I can write you a check for 20, and write a startup check for 25K. So you got to give me a reason why that is worth doing. And the answer needs to be because that 25K check in 5 years is going to turn into 250K or 500K or $1 million, because that's really the reason that anyone who's looking, anyone who's a serious investor is investing. And that's different from friends and family. Friends and family round, that initial round, and kind of into that, what I call the network round, where you're talking to suppliers and customers and mentors and people like that, and sometimes me. We're investing because we want to support you. We're investing because, Christian, you're my best friend, and I trust you, and I love you, and I'm willing to give you some money, and good luck to you, and send me a postcard when you're successful. I'm investing because you're my son, and I don't have a choice if I want you to leave my house. So here's some money. I'm investing because I'm with a company, and this solves a huge problem for us. If it works, it's game changing. We want it to succeed. Here's a small amount of money to let's try it out. These are very different from VCs, standard VCs, not corporate VCs, but standard VCs and angel investors. Everyone thinks angel investors are just rich people who want to throw money at interesting problems, and that's not true. We are individual VCs. We are investing because we are, instead of putting money in S&P 500, we're putting some of our money into startups, and we are looking for a return.
That's so interesting what you say. I think after 25 years, after 18 years now in the startup world, I started with Innovative spin-out in life sciences, which is so easy that you said.
Yes.
I think it boils down
It's still
to
really tough. I don't want to dismiss it. It's life science is not easy.
Don't worry, just kidding.
Yeah, and if you come up with a cure for cancer, I will dedicate my next book to you. But
well,
but
that's the
as
challenge.
an investor, it's easier to evaluate because you don't have anything other than the science to think about.
Yeah, that's one interesting part. But for the founders, I think it boils down when people approach me and say, Christian, you know a lot of investors. Can you help us get in touch with investors? Say, forget this introduction business. I mean, introduction is nothing today. But it's two questions that you need to answer. One is, how much money do you need?
Mm-hmm.
And when I hear, for example, just made up number, 3 million, my second
Right?
question is, how can you guarantee me that after maximum of 10 years, you can return 30 million? And
Yes.
most of the founders look at me and say, why should I do that? And I say, well, it's so easy. You don't have an investment case. You don't need to look at the
Yes.
details of the
Right.
pitch deck or what they are doing.
Yeah.
If they are not confident that in 10
Yes.
years' time, they can
Yes.
return a minimum of a 10x, and if they are
Yes.
puzzled and confused,
Yes.
don't pitch to investors, is my opinion. How do you see that?
That's right. Oh, absolutely. That's okay. So when somebody sends me a pitch deck, I don't go through it page by page. I turn to 2 pages in particular. The first one is revenue projections. Now, everyone says, why do you look at revenue projections on a company that is, that they don't even know what their product is yet? This is a very early stage. But this is what the company is aiming for. This is their plan. It's going to change tomorrow, but are they looking to build a product that's going to be $100 million, $200 million, $500 million, and as an acquisition target? Are they building, so the VCs don't have to worry about it. They don't get, the smaller ones don't get to that stage. But as an angel, we get a lot of pitches. They're building a nice, comfortable, profitable $10 million. And that's wonderful. I love niche businesses. I love small, sustainable businesses. They make important products that people need every day. They are not venture businesses. So my first question is your plan to get to a size that makes this investable for investors? Because if you're under 50 million it's hard to get a high value. There's no way you're going to get a 10x acquisition. So it's not investment. So the second thing I look at is what is the exit strategy? And it's not even there most of the time, but who's going to acquire this business? Why are they going to acquire it? What sort of multiples they typically pay? And then I can say, okay, if this is successful, then this can give me a good return. And most pitches don't have that information in there. And I'm like, okay, that's an interesting product, but I don't see how you haven't convinced me it's a great investment.
Yeah, that's so interesting when you look at life science, and I think also the others from the Climatetech. I mean, you mentioned it's a lot about product. When it's a
Yeah,
scientific background, you see tons of data, of scientific
yeah,
data.
yeah.
When we wrap it up in a core message now on this podcast, what's your advice to founders? How should they change the pitch and the deck so that it
Yeah.
truly stands out when an investor looks at it?
So you need to cover the 11 topics. And I've got that on my website. And I have an article in there I always refer people to. That's the 11 slides of a perfect pitch deck. And I think pretty much everyone, there's a bunch of other templates out there that have pretty much the same thing. So problem, solution, market size, go-to-market strategy, competition, competitive moat, team, deal terms, exit strategy. I'm probably missing one or two in there. But it's not a template. It's a story. It's a story of how you're going to solve a problem and get to a large size, and somebody's going to acquire the business, and the investor is going to make a lot of money. So you need to tell that story and a story arc. But I think the one thing that distinguishes the great pitches that people invest in from the 99% of pitches that we hear and we're like, okay, well, that's interesting, but we're not excited about it, is the great pitches. No, let's start the other way. The decent pitches, I'm not even going to talk about the bad pitches because that's most of them, but the good pitches tell me why this is a good investment and why I will get a good return from it. The great pitches, let me back up again. The good pitches tell me why this is a good investment, and why there's a good chance that the company will succeed. The great pitches tell me why this startup has zero chance of failure, why this is a slam dunk, why this is going to be the 1 out of 100 that's going to make it big, why this is going to be the 1 out of 10 that is going to make up for all of my losses, why this is the one that you absolutely can't miss investing in. And when somebody pitches like that, they have no trouble raising money. And even if it's not in their field, right? I tend to focus on Climatetech because I know the space, but I've heard some in all sorts of things like, wow, I have to invest in this. This is the great one. And when we talk about the founder and we invest in the founder and it's the team, that's really what we're talking about. Are you pitching us on why you are the people that are going to succeed? Why this is the one startup that is going to make our day, why this is the one we're going to be telling all of our friends that we invested in, right? And so I say amateurs tell you how they're going to succeed, professionals tell you how they're not going to fail, how they can't fail, how it's impossible that they would fail because they've got everything in place. They are the ones who are going to do it. So that's the difference in a good pitch and a great pitch.
Oh, really? It's it's always what the successful ones pitch success, and you said that those who really stand out
Yeah.
come from the direction that they explain why they can't fail. Is it really
Yes.
such a difference?
It's the same pitch, but it's kind of a different attitude. In some ways, it's just being good at sales, right? This is the product that's going to solve your problem. This is the investment that is going to be the one that makes it for you. And you can't go overboard, right? I mean, sometimes they're just too slick and you're like, yeah, I don't believe a word. They don't have any credibility. But if done right, it's like, it's not why this has a chance of succeeding. It's why this won't fail. Why we've got all of our bases covered. Why we know all the steps that we're going to need to take, why we've already talked to customers and they're already excited about it, why it won't fail when we scale, from lab to pilot to commercial size, because most chemical processes fail in these things. We have the team that knows all these things. We have the team that has done all these things before. We have every contingency covered. Worst case, this happens, we know how to deal with that. So you just really get a set of confidence. Oh, and then the biggest one, right? A lot of companies, they make a great product, but then the market turns out to be really tiny compared to what they thought it was. Or, customers like, well, that's great, but I'm doing something else right now, so they don't want to pay for it. And so that's kind of the main failure mode is a decent product, but it's just not. It's just the market is not what you think it's going to be. So convincing us that yes, we know that there's these customers. We've already signed up these customers. They are waiting for this product. They're sending us POs right now. They're desperate for the product. We just need that money to build the product for them. And we've got all the steps marked out. We've got the people to do it. We've done it before. And that just gives you confidence that these people know what they're doing. It's not a couple of college kids who have a great idea and then, just don't know how to execute. It's all of the pieces are in line, and it's just a matter of, put the coins in and turn the crank, and out comes product, and then that turns into money for investors. So that it's a different pitch. It's a different it's a different way to present the solution to customers, because to investors, the usual way is the template, and here's our product, here's our market size, here's our competition, but instead of saying, well, here's the competition and here's why we're better, it's like, here's what we're doing and here's what the competition is doing, why that doesn't work, and why people have told us already that this is the solution they need, and they're already begging us to get it to them. It's a slight difference, but it's a different story.
Yeah, that's an interesting point, I think, and it totally makes sense after listening to you. I think that when I interpret your words, that the successful founders basically create a checklist and are aware that when they pitch, they basically pitch to a reptile. So it's a limbic system, it's fearful, and they have to work through the checklist and come up with answers to all potential fears the investor has, why this will not be successful. So it's basically a method that I read in Jimmy's only book about PayPal. He describes that David Sachs, I read it today, that David Sachs used a similar technique. He walked through all threats that could destroy PayPal at the time, and did this with his team regularly to find out the weak spots in the company. So it's basically, if I may so interpret it, what you said, it's a similar technique that successful founders should, before the pitch, think through what are the fears of investors, what can destroy our business, and how did we tackle that already, and make sure that this doesn't happen. Is this an interpretation you would agree to, or did I miss something?
So that's completely true. But it's more than just having, getting rid of the red flags and having everything covered. It is really just, it's a different story. It is, we are going to be the 1 out of 100 that is going to be the huge success, and you need to invest in us, and here's why you need to invest in us. And if you don't invest in us, you're going to be kicking yourself for the rest of your life. We are the one that's going to succeed, instead of the usual pitch of, here's the reasons why here's the reasons why we have a chance of succeeding. So yes, they have to have all of their bases covered, and we want that confidence that they know all the things that they need to do. They've been there before, they've done it before. There's no gaps. If there's any gaps, they've told us what they are and how they're going to rectify them. I mean, we know there's going to be gaps, right? So tell us where the gaps are. Tell us what the plan is to solve it. But mostly, again, the biggest chance of failure is the market turns out to be a lot smaller than they thought it's going to be. So why is this going to be huge? Why is somebody going to spend $1 billion buying the company once they have a good solution? And so it's just a better sales pitch, right? I mean, when you go in to talk to a customer, you don't tell them why your product is good. You tell them why your product is the only one that's going to solve your problem. And it's the same thing. Instead of telling me why this is a good investment, tell me why this is the best investment we will ever make.
Yeah, the good salesperson talks about the outcome he produces or the solution produces
and
for
the
the
outcome is
customer.
this going to be a great success, and there's no way it's going to fail.
No, it's you mentioned drug development before, biotech, life science. So when I look at pitches, you always have this, we have a great science. And the truth is, the great science is not the problem. The problem in drug development is the clinical development stage to get it through clinics to the market.
Yes.
And the interesting thing is, when you look at the team, there is nobody usually with early stage companies who has any experience in that field. So one of the biggest problems investors have then is, okay, if they have nobody on board who understands how to turn science into a drug, into a product, and also understands how the healthcare system works, and also understands how hospitals and physicians work and what their problems are, it's a high chance of failure because they can't just turn it in a product. And this, I think, should be tackled before the pitch to investors, as you said, with the salesperson. Just think about what is the outcome that you want to have, and then structure your team accordingly.
That's completely true. And I think I was a little bit dismissive about saying life science is easy because I'm not in that space. I'm not thinking about all of that, where I think probably other people look at climate tech and say, oh yeah, just build a better battery, right? As soon as you build a better battery, it'll be worth billions of dollars and investors will make lots of money. So the more you know, the more you understand the challenges.
I think it is easy when you have the right team, and to get the right team, you need to understand what problems you will face along the way. And then you need to make sure that at least in the founding team, there is someone, doesn't matter what industry it is, that there is someone on the founding team who has a track record on solving exactly this problem. I think this changes the probability of success in an investor pitch tremendously.
Yeah, and especially hard tech, both climate tech and life sciences. Those things are very technical, right? It's not something you can just go on to on YouTube and listen to some articles and get some advice. You really have to know, like, what is the FDA approval process and how do you work that system, right? That is somebody who's been there before, maybe not as the person in charge, but has been through it. They know what the process is. Clinical trials, like you say, that's a whole world of clinical trials. And if you don't know what's involved, how to organize them, how to pay for them, how to get people to join them, you can study all you want, but you're not going to have the right experience. Whereas software's so much easier, right? There's really being a good salesperson and being a good marketing person isn't easy, and it takes kind of personality, but you can fake it. I can fake it. And you have something that people want, they will tell you what they need. They will buy it. I don't want to say software is easy, but if you're a programmer, you get a programmer and get a business person together, and you can make a product and you can build a business around it. And if there's anything you don't know, you can ask mentors, you can watch YouTube, you can read some books, and you can talk to customers. You can figure it out. If what you try today doesn't work, you can try something different tomorrow. Whereas you go into a clinical trial, you better have that planned out perfectly, or you just wasted $10 million. And I've unfortunately been involved in some startups that wasted $10 million and then had to go back and redo the clinical trials if they didn't just go out of business. So that takes some real expertise to kind of know. You can't just get somebody who's like, oh yeah, I can figure it out. You really have to have people who know.
I think Climatetech is not much different. It's tremendously difficult when I think about you mentioned batteries. You can produce the best battery, and then you don't have anybody on the team who understands how the industry works and what their needs are and which people want to purchase the battery at the end of the day. I can also imagine it's like life science, more a B2B business, not a B2C business. When I look at, I think the easiest game today, when you look at today's capabilities compared to the 90s, is probably the gaming industry. When you can produce a nice app with a nice game, you get an influencer with a huge followership,
Mm,
and you give them a
right.
cut. You give them a cut of your
Yes.
revenues. They just
Yep.
promote it on their profile, and deal is done. When I look at life science, when you don't know the pharma industry and you don't know the decision makers in there, you have zero chance moving the product forward towards a license deal so that you can return capital to the investors and make sure that if it works after clinical phase 2, it moves forward. I think Climatetech must be different, isn't it? You need to understand the industry, the decision makers, you need to have the contacts.
Yeah, and like you were saying, clinical trials for life sciences and pharma, in batteries, you better understand manufacturing, because just having a great chemistry doesn't mean you can manufacture it, or you can manufacture it at a reasonable cost, because it's all about cost in the end. You know, it, and so you get some scientists who are like, I've just invented this better battery, but can you manufacture it? Can you manufacture it at scale? Is it safe? Is it, is it going to charge fast? There's all of these questions beyond just, does it work? And then you have, yes, how do we get it into customers? That's probably one of the biggest failure points is, and this goes everywhere in startups. You get the product founders, and they have this idea. We call it, build it and they will come, from the Field of Dreams movie. Like, if we build this product, customers will find it and they will love it. Now, I'm a marketing person, right? So I'm always thinking, how do I get that product in front of customers? How do I get customers to buy it? How do I get them to change their processes? How do I get them to get away from the status quo that they've been doing for a long time? And that is not easy. And it depends on what the product is. It may be close to impossible, or we love to see drop-in replacements, because that's just switching one thing for another. But what are they thinking? Is this something that needs to last for 20 years? If so, how are you going to prove that it's not going to die after 10 years? So, like you said, it's understanding what the customers need, what their requirements are, what their processes are, what their purchasing process is, what their evaluation process is, and most of all, how long it's going to take. Startup founders always get that wrong in the hard tech space. I think there's some understanding in life sciences that it's going to take a long time, but when it comes to things like batteries, everyone thinks, okay, I'll build it and I'll send out some samples and they'll test that for 3 months and then they'll put it into the manufacturing process. You're like, that is not how General Motors works. That is not how Tesla works. It's 3 to 5 years of, it's like a year of evaluation. And then it's like 3 to 5 years of real world testing. And then they're like, okay, we're confident in this. We're going to move towards this stage. There are some things they can do faster, but if they're expecting a 20-year lifetime and they're on the hook for warranties, you better bet they're going to be testing it pretty carefully for a long period of time. They're going to be very careful about making any changes. And so those purchasing cycles are really, really long. And that's fine if you're working at SG or LG or Panasonic, and you can, 5 years is no big deal. You're a startup, you've got 18 months of runway. Having a 5-year purchasing cycle is deathly. And even worse is not planning for that 5-year cycle and having it as part of your milestones. You think you're going to start getting orders in a year, it's just not going to happen. And a lot of companies go out of business not because they didn't have a good product, but because they ran out of money, because they couldn't, it was going to take too long and they didn't have enough traction to get more funding.
Yeah, I think one key part of this conversation is that understanding that startup means building a business, not building a
Yes.
product at the end
Yes.
of the day. And
Yes. That's
founders
right.
need to understand all aspects of their business, especially also the sales
Oh,
cycles that you mentioned.
yep. Absolutely. 100%. It's a business. You have to know how to build a business. That's why investors almost always look for a founding pair, at least a pair. On a hard tech thing, we want somebody who's really an expert in the technology, and we want somebody who's really an expert on the business. And you're just not going to find somebody who's both. And if they are both, they don't have time to do both. Um, and this is, as a marketing person and business person, this is really frustrating to me. So I hear a lot of pitches, and it'll be like two PhDs who are, brilliant, and they understand the science, and they say, well, this guy's going to be the CEO, and this guy's going to be the CTO, or this girl. And I think that's wonderful. You know the science, you have nobody who has any business experience. They're like, oh, well, we did a Techstars mentorship program for 3 months, and we learned all about how to sell products. Like, I've been doing it for 20 years and I don't have a clue. And you're going to do it in 3 months, and you're going to start, selling products to customers and do the marketing. And so it's back to that field of dreams. We build it and the customers are just going to buy it. It's like, no, it doesn't work that way. The marketing is as important as the product itself. The business side, the sales side, it's not just, everyone has this idea. Well, we'll get it working and we'll hire a salesperson, and the salesperson will just go out and sell. Never, ever, ever works. And I always tell people, don't hire a salesperson until you're Series A. Do not hire somebody whose job is to be on commission, to be on quota, to go out and sell something until you have a repeatable sales process. And the way you got to the repeatable sales process is you've done it yourself for 3 years, and you've talked to customers and you've gotten their feedback. Because a salesperson, he just wants to make a sale, he wants to get something signed, and he wants to move on to the next one. It's a numbers game. That's not what you need when you're early stage. You need to talk to customers. And I tell people a no is just as important as a yes. If you can get a no and then you can find out why, well, you get one person to buy something and 5 people to tell you no for the same reason. It's like, well, okay, we've solved one person's problem. We can solve these other 5 people's problem. This is not the product the market needs. This is the product the market needs. So you need that feedback. And that feedback is more important than, a sale of, probably like $10,000 for a prototype or a sample, right? That's not going to get you very far. Sounds exciting. What you need is that feedback. And people telling you no, and telling you why, that's going to take the CTO and the CEO sitting down with the potential customer and understanding their needs. And so everyone understands, okay, MVP that's our trial. That's to see if people are interested or not. And I say, your version 1.0 is a trial. Your version 2.0 is a trial. When you get to version 5.0, you go hire a salesperson, just get them out selling to everybody. But version 1.0, version 2.0, especially your betas, the feedback is more important than the sales. That's what you're after. And you're not going to get that from a salesperson. The CEO needs to be involved, needs to understand the customer's requirement, needs to understand whether the product can be adapted or changed, and whether then there's an important decision of whether you're going to pivot the business to what you're hearing when they said, well, this is nice, but what we need is this, or this is nice, we'll buy it, but we really want to solve this problem. Or best, they buy it and they say, here's how we're using it, and it's probably not the way you thought it was. And it's just like, oh, okay, well, if they're using it this way, then instead of making all these features over here, I need to make these features here that people need. And so that customer feedback is so much more important than a PO, which is why the CEO needs to be doing sales for like the first 3 or 4 years. Then later, when you've got a repeatable sales process, we have a finished product, when you're already selling a lot of it, then you need a salesperson to go out and just sell the product. So, unfortunately, a lot of founders don't get that. So please listen to me. Please don't hire a salesperson. Please think that, the role of the CEO, is tough. CEO has 3 full-time jobs. Number 1, you got to build product. And yeah, you got a CTO who's building the product, but the CEO is responsible for the product. So you may not be doing the coding, you may not be in the lab, but you're the one who's deciding what the product is. That's pretty much a full-time job. Second, you're the salesperson. You need to be selling full-time. You need to be talking to customers full-time. You need to be out there every day, trade shows, customer calls, Zooms, whatever. You need to be talking to customers all day, every day, to find out what they need and whether you can fit their need. And third, you got to be finding investors and grant money and keeping the cash flow in the business, and doing all the business things at the same time. So you have to do all 3 things at the same time. And don't don't count on getting any sleep.
I would add a fourth thing, the nurturing mummy of the
Oh,
team, but also
that's right. Absolutely.
but also
Absolutely.
but also
Yes.
swinging the whip when it's necessary. Both can
Yes.
be
That's
demotivating.
right.
Too much nurturing
You're
is not
running the
good.
business.
Yeah.
Yeah.
I would like to overemphasize two things because I think it's really important, and also see this also in California, also in Boston, and of course in Europe. And you always thought the United States guys have it figured out. But I like your field of dreams analogy when people say, okay, now we have a great solution, nobody's coming. I say, well, what do you
Right.
expect? The world is noisy
Yes.
today. The world is loud.
Yes.
There are so many
Yes.
liars on the market, so many people who are
Yes.
really good salesperson who make customers think they have the best solution. Customers get frustrated because they buy something that doesn't work and then are
Yes.
scared and anxious and say nothing on the market works and you have the best solution and they don't find it then because they're already
Yeah.
scared off. Uh, what is your recommendation when you hear a startup saying they don't come? We should. Why don't they buy our product?
Well, they need to be talking to customers, and they need to know what the customers actually need and what they will pay for and what their pain points are. So they need to make the right product for the customer, and they probably haven't yet. If customers are not throwing money at them and not throwing orders at them, then they don't have the right product yet. So they still need to figure out their product market fit. They haven't figured that out yet, even though they think they have. And the second, then they need to market it properly. They need to be, whether that's advertising, whether it's trade shows, whether it's working with distributors and resellers, whether it's having the right website, whether that is, going out to the supermarket and handing out samples, whether that is doing advertisements during the World Cup. You need to figure out how you're going to get in front of those customers, how much that's going to cost, and how much it's going to return. Figure out the way of doing that, and so that and is really about, again, understanding customers, what they need, what they respond to. Usually just a few keywords that really highlight their problem points and how you solve it. So don't talk about, and everybody says it, right? Don't talk about what I can do for you. Here's my product. Please buy my product. That's not going to get anybody interested. It's, here is your problem, and here is how I can fix your problem. Why is this going to make your life better? And understanding what that is, what those keywords are, what that pain point is, and how you're going to solve it, maybe 2 or 3 different versions of that, get that across very clearly. Not why we have a great product, but why we solve your problem. That's marketing. But, so we hit on like product market fit. So you got to have the right product market fit. If you don't, no one's going to buy it. And you have to have the right go-to-market strategy, right? If I do Super Bowl ads for my batteries, no one's going to buy that, right? No one goes out and says, I need, this manufacturer's lithium-ion battery. No, they go buy a car, right? So Super Bowl ads aren't, this is an obvious thing, but you need to know where the customers are, who the customers are, where they're going to be, how to get to them, and how they're going to buy. And most people don't understand, and that's what we mean by go-to-market strategy. It's not how am I going to get my first 5 customers, how am I going to get my first $1 million. That's just going to be, you going and talking to people and getting a few things. So it's how you're going to get from the $1 million to the $100 million, and that's not easy. If it's easy, everybody would be doing it. And so you really need to understand the market and the customers and have a strategy. Are you going to hire a huge sales team? Are you going to work with resellers? Are you going to be doing a lot of advertising? Is it going to be influencers? Big companies can kind of do all the above. Startups don't have a lot of money, and so you really have to be smart. And how are you going to ramp that up without burning through tens of millions of dollars? So,
This
marketing's
is
tough.
this
Building a
is this
product is tough, but
this is
those marketing.
sorry for interrupting. I think this is
Yeah.
really a crucial part, and I really like how you phrase it. It's product market fit. You need someone on
Yes.
the team who is interested in doing this hard work in finding product market fit, which means identifying potential customers,
Mhm.
flying to them. They won't come to you. You need to go to them, either at conferences or the offices, sitting down with them and identifying what are their needs, what are their problems, which problems do
Yeah.
they have, and
Right.
then fly home, talk with your team, and figure out how does your solution solve this problem
Right.
and how you should communicate this to them.
Yep.
And then comes the next funny part in my conversations with startups when they say, it's pretty cool. We don't have a lot of money. So what we need is basically people who bring us customers. So this
Mhm.
is why we hire someone, pay them a finder's fee when they bring a customer. And I say, this doesn't complete your product market fit mission because
Right.
someone just arranging half an hour call between you and them, they won't buy because they don't understand there's no bridge between
Right.
their need and your solution. So you need to bridge that first. And this is hard
Yeah.
work.
Yeah. Yeah. That works once you're already a 10, $20 million business and you have a reputation and people know who you are. And then it's just like you need introductions, you need to get in front of the right
Yeah,
people. But
but
when
then
you're
you
getting started, it doesn't.
but but then you already did this product market fit work. And
Yes, that's right. That's
when I
right.
look at
Yep.
the startups with a solution,
Yeah.
most of the time they fail because they haven't figured out the product market fit yet. It doesn't mean that they
That's
don't
right.
see it. It means they have not built the bridge at scale. And they first need to
That's
build
right.
this goes into the second part that you mentioned, the sales process. This is then the next illusion. Once you have the product market fit, you need to figure out the sales process. And the worst thing you can do is hire the average salesperson. They won't deliver the sales process. They
Right.
want to have a handbook, they want to have a
Yep.
description, they want to have a script, they want training, and
Yes.
then they can sell. What the founders need to figure out is the entire sales process once they know the product market fit. And this is
Yes.
not something to delegate to an average salesperson.
Yes. And even worse, salespeople are compensated for short-term success. And people who tend to go into sales um, tend to be thinking short term. How do I get a sale today so I can get my quota, so that I can get my bonus, so that I can have a nice Christmas present or buy a new car? And that's fine, but at the early stages, you need long-term thinking because those short-term sales don't really mean anything other than validation. What we need is those conversations with the customers. We need to be thinking, yeah, I can give up. I'm probably gonna have to pivot at some point, right? So I'm giving up all those sales anyway. But what is the longer term opportunity, and how do I judge, staying with this versus switching over to this, which may be bigger but is starting over? So the CEO has to do that, and maybe the CTO. Um, that's not somebody you can bring in and say, go sell. One of the things I do is, when I was running my startups, I would bring not just the sales and marketing team to trade shows. I would bring the engineering team, and that accomplished two things. And it was amazing. You'd walk around the trade show floor, and all of the trade show booths, whether small ones or big ones, it was always just sales guys. You walk up to a booth and you ask them a question, and they wouldn't know the answer. They'd be like, "Well, here's what we have. Can it do this? I don't know. I'll get back to you. Can it do this? Oh, yeah, of course it can do that. Can it do this? Oh, of course it can do that." And of course, it could. I would bring a technical, I would always have at least one technical person and one marketing person in the booth. Because when people say, "Can it do this?" That's a key question, right? Why do they want to do that? Let's talk to them. Let's find out what they're trying to accomplish. Instead of like, do I have this feature list? It's like, what are you trying to do? I can't ask those questions. I need the engineer to talk. It's an engineer, it's a technical product, engineer to engineer conversation. I need the engineer to talk to their engineer and really find out what problem they're trying to solve, so I can say, yeah, okay, I don't do this that you asked for, but I can do this, which will solve your problem. Or I can, with a week of work, I can adjust this and it will do exactly what you need. And by the way, wow, that's a great idea. I'm going to add that. So it accomplished two things. One is we got a lot more sales because it wasn't people would ask us to do things, and all I could answer was no, it can't. Where the engineers would say, well, but now that I understand what you're trying to accomplish, we can make it do that for you. And then more importantly, we'd find out what the customer needs. And I'm not the technical person in the room, so I couldn't really ask those questions very well. And so that was just the best place to do customer discovery and really understand product market fit and what people were looking for. And you just miss all that by sending a sales team to the trade show. It's just like so much better. Now the engineers hate going. They just absolutely hated the trade shows, and I had to force them to do it. But as long as they were compensated based on long-term success of the business, instead of like, did you do this, write this many lines of code this week, or did you do this test this week? Then everyone is part of the team. And that's the other thing I hate about sales is it's often, well, the salespeople go and sell, they get a commission, they get a bonus, and everybody else is just like, okay, well, the company got some sales, and now I have more work to do. I really like it when everyone is involved in all of the processes. So, and you can only do that in companies up to about 20 people in size, maybe 25. When you get to a 100-person company, you can't do that anymore. But when you're smaller, you can do these things. And you can have everybody kind of involved in all the processes and seeing what's going on. And everybody does have something to offer. The marketing team should know what the engineers are working on. The engineers should be talking to the customers. You shouldn't have a separate support team because then you're isolated from everything going on. So I really like everybody just being one team with like different main hats and people switching. And trade shows were a good place to do that. Support, like I would force the engineers to do support. One thing engineers don't want to do is support, but when they're doing support, they're hearing the problems customers have, and it's probably not what they thought. The product is being used in a different way than they were expecting, and that's causing the problems. And then they come back and they come out with solutions to it. Great, now we have a better problem. So I really like getting everybody. It's a great thing about startups. You can get everybody involved in all aspects of it and get people out of their comfort zone, make sure that they are kind of know what's going on in all the places and actively involved in all the areas.
Yeah, I totally agree to what you say. I think startups or companies, scale-ups, any kind of company needs to budget that really and factor that really in. Trade shows, you said, I think this is a crucial element. Trade shows are not for signing deals. And this is the misconception I very often see in the startup world when it comes to funding. There are designated trade shows, I think in every industry where a lot of investors attend, or you call it conferences or another term.
Yeah.
But it's not for signing the deal. It's for getting contacts and the fact-finding mission, what they are currently looking for and how the solution should look like. Also, when it comes to B2B environments, talking with potential customers, with business developers, salespeople, it's not about signing the deal at a trade show. Right. It's understanding the industry. And in my opinion, what you mentioned, I think any company needs enough budget that at least once a year, every team member has to go to one trade show to get a deeper insight into the industry. And this very often really misses. May I ask you another question? I mean, in Europe, we tackled it earlier. In Europe, we have the problem that, still the problem, in my opinion, that we can't really scale companies with venture capital, which is a pity. It leads to very fast acquisitions by the industry. It's good for the industry. It's probably cheaper, but I think it leaves a lot of value on the table. Sometimes, in my opinion, it's better that the company just develops the solution further. It becomes a much better solution. And the usual way European startups take is relocating or moving to the United States. And lately, you mentioned earlier that salespeople like to travel, but when you look at the engineers, they don't like to travel. In startups, very often you have engineers and scientists, and they have the idea, get US money, and they invest in Europe, and I don't see them ever again for the next 5 years, and then come back. When a European company wants to attract US investments, starting with business angel money and then moving upwards to venture capital, in your opinion, how should they position themselves to attract investments from US investors?
Right. So I'm going to focus on the early stage. So pre-seed into seed. So an angel group like mine and me as an individual investor will only invest in US companies. Now, VCs have a different structure. They actually, most of them set up two separate legal entities, one for investing in the US, one for investing outside the US, because all investments outside the US are subject, especially for individuals, are subject to a bunch of very crazy reporting and tax laws that are just not worth the hassle. So there's enough opportunities in the US. I'll only invest in the US. But I don't care where the company is actually operating. I don't care where their customers are. I don't care where the team is, so long as my money goes into a US corporation. So you can be in Austria and say, we're a worldwide company. Our team's in Austria now. Eventually, we're probably going to have developers in India. We're going to have support team in Ukraine. We're going to be a worldwide company. But right now, our team is in Austria, but we need US investment because that's where the big investment is. Fine. You set up a corporate structure that is a Delaware C Corp, and that's the parent company. There's probably a subsidiary that's running the local operations in Austria or Vienna. And that's fine. As long as you can convince me there's a great market there, I don't care that your team is Austrian. That's great. That your customers are, say, pharmaceutical companies or chemical companies in Europe. And in fact, in Climatetech, Europe is ahead of the US. And there's more things going on in things like batteries and and energy storage and things like that. So it's great. I would love to invest in more European companies, so long as the corporate structure is a Delaware C Corp. So that's all you really need to do, is set up the Delaware C Corp, make the European company a subsidiary of that, and we can invest in the Delaware C Corp. And you can come pitch to our investment groups. You can tell us all the great reasons why you're a great startup and our chance to invest in a European success. Now, once you get to the big VCs where they're putting in $10 million, $20 million, $100 million, their requirements may be a little bit different. And they may say, look, the big market is in the US, so we are going to invest in somebody who's focused on the US, definitely in life sciences, because the acquisitions in the US are just so outrageously large. Our health system is broken. So any drug, no matter what, is worth a few $1 billion. So you better be in the US and you better be going through FDA approval. I don't deal with life sciences, so I don't have to worry about any of that. So Climatetech, Europe's ahead of the US, and it's great. And I'd love to invest in more European companies, but legally I'm kind of boxed in that I have to invest in US companies. So great, set up a US headquarters that's just a lawyer in Delaware who signed some forms, and now you're Delaware C Corp, and now investors all across the US can invest.
Oh, that's a good idea. You really think Europe is ahead in climate tech?
Yes, absolutely.
What are the reasons, in your opinion?
Well, on the customer side, Europe cares. You don't have the same. Europe has political problems, but they're different political problems from the US political problems. And it's very difficult to kind of push through. Well, Americans don't like regulations. So that's a problem. And like saying, you need to reduce methane leaks is stuff that's kind of basic, is very difficult. Saying we need to transition away from petroleum gasoline powered vehicles to electric vehicles. We need to get away from coal. We don't have a carbon tax. That's probably the big right there, right? No carbon tax in the US. You have a carbon tax in Europe. So, and when I look at the chemicals companies like BASF, they're investing in redoing their operations and looking for startups and looking for ways of reducing the carbon content, where American companies are really, we're thinking about it, but there's just no push on the regulatory side, no push on the government side, and definitely no push on the consumer side. So I just took a whole class on batteries, battery industry, and it was run in Europe. And I was like, I was shocked at how much time we spent on recycling batteries. And I thought, in America, we don't we're not thinking about recycling batteries. At some point we'll have to do it, but there's no regulations around it. Europe has a battery passport regulation coming on. There's a lot of regulations in Europe. So Europe's problem is too much regulation. But there's a lot of regulation about how we're going to reduce the carbon content, how we are going to get rid of dangerous chemicals, how we are going to do more recycling. America, we're a lot more capitalist, and we say, yeah, well, the market will figure that out. But in the meantime, we're not putting incentives in the market like a carbon tax. So, gas and oil is so cheap, natural gas is so cheap that it's really hard for any green solutions to compete. So then there's more government money in Europe going towards green solutions and and safety solutions and recycling and things like that. The US is just not as nearly as concerned about.
Yeah, the European landscape. I mean, this is, I think, an interesting tension on the global markets. You said in the US, the core opinion is the market will figure it out, and Europe
Yeah.
has a lot of regulations. When you look at the
Yes.
CO2 tax, I mean, it was introduced in times of high inflation. And you mentioned that the United States doesn't have the CO2 tax. So when I look at
Right.
the economic effects of the CO2 tax in Europe, it's currently more a burden for the companies, so they have to pay a lot more,
Mm-hmm.
which theoretically pushes a lot of pressure on the economy to evolve green solutions. But
Right.
today it's so easy to relocate a company, and when you see that
Mm.
energy is much cheaper in the United States, a lot of
Yes.
European companies are doing that right now. They just shut
Yeah.
down shop in Europe and reopen it somewhere in Latin America, United States, with less taxes. We will see how this turns out. When we look at climate change, how do you see this problem? How big is, I mean, whenever I open the internet, I see these two big opinions currently on the internet. Uh, One part says it's completely a lie, it doesn't exist. And the other part says in 100 years, we will all be dead if we don't do it.
Yes.
How do you see the urgency of climate change?
Well, I'm not nearly as extreme as those polar views, which I think are more about people trying to attract attention than actually believing that. But I do define climate change as the defining crisis of our generation, and we've made this problem for ourselves, and we need to fix it. But it's a difficult problem to fix because it's a worldwide problem, and the U.S. says, "Well, why should we spend more on green technologies when China's not doing that?" Right? So it takes global cooperation, and that's not something that's happening right now. But um, on the technology side, on the startup side, I'm always looking for. I mean, I've always been energy sustainability has always been a passion for me, and it just feels like we need solutions, and I really want to see solutions made. I want to be contributing to making solutions. But especially in the U.S., the political environment. So even in the U.S., we have two different U.S.s. We have the coasts, which are very much liberal. I don't want to get too far into politics, but very much climate change is a problem. We need to do something about it. Then we have the middle of the country for the most part, which is like, yeah, well, it'll solve itself somehow. Why should we spend more on our cars because it may get hotter in Italy or something. Um, I don't think it will all die, and one of the problems is the U.S. probably won't be all that badly affected by climate change unless it gets really, really bad. Some places will, like Miami, or the hurricane's going to get worse. The weather's going to change, but will that completely affect my life? Well, I'm too old for it to make much of a difference. I'll be dead by then. But even if I wasn't, the area I'm in, we might get more rain, which isn't a bad thing. We probably have more storms. But the bigger problem is going to be like, well, the places where they grow corn and wheat, it's going to be different. We're going to have to change. We're going to have to adapt. We can adapt. You go some places where there's not enough water and they can't adapt. And then you're going to have more wars, and you're going to have more struggling people. And the food that we're growing is going to be more difficult to grow in some places. And So it's going to be about adoption, but it also means we're going to have more wars, we're going to have more conflicts, we're going to have more challenges that we shouldn't have, and that frankly we could get rid of if we were better, um, better about protecting our own environment where we live.
Yeah, I totally agree. I mean, it doesn't really matter. It's more an academic discussion between these two poles, which is fun for social media. But at the
Yeah,
end of the day, we have to make sure that our lifestyle is sustainable and that we have enough to eat. We solve the core problems, and for that we need technological solutions. In any case, it doesn't matter if
right.
climate change is man-made or it's just a cycle of nature. It happens, and we need solutions for that. In your opinion, what are the most promising areas within climate tech that you are excited about currently?
So I mentioned batteries. I'm so excited about batteries that I went and took a whole class on batteries in the battery industry, um, because I think batteries changes everything. If you could make a battery that had 10 times the capacity of the current lithium-ion batteries, well, and 10 times capacity at the same cost means, same capacity at a tenth of the cost. Now, EVs are cheaper than gas cars, right? Now, solar and wind energy, you can store it, and it makes a lot of sense. So, and I see a lot of innovation in batteries, and in chemical angels, where we hear pitches in climate tech, it tends to be batteries, 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 batteries. Everything from, kind of minor improvements to the existing battery technologies is great because then you just drop in replacements. Better anodes, better cathodes, better electrolytes, better separators. In lithium ion batteries to, okay, well, can we make different kind of batteries? Can we make flow batteries? Can we make lithium metal batteries? Can we make solid state batteries? Can these be cheaper? Can these be safer? Can these be easier to recycle? Can we do them without using cobalt that has to be mined in the Congo and has problems with that? So fundamentally, I think the biggest challenge is that batteries are expensive and not particularly ideal yet. They're getting better every year, but they're getting better at 10% per year, whereas the CPU got better at, it doubled in capacity every year. So we need to be more on that cycle. And if we can do that, that changes everything, because now we can electrify everything. Now gas, now solar and wind start to make a lot more sense and be the most affordable solutions. Because so solar power, if you think about it over the 20-year lifetime compared to building a natural gas plant, is cheaper than building that natural gas plant when you include the solar is free and gas is, you have to pay for it. But you can't store it. So you still need the gas plant to run at night. If batteries are cheap and effective and fast to charge, then that changes that whole equation. So I really think that batteries, number one, is the biggest area where we can make a difference. I'm looking at some other technologies and things like direct carbon capture, air capture, or waste stream capture. There's some interesting technologies coming there. I'm involved in a lot of startups in the green chemical space. How do we make chemicals? How do we make things like fibers without using petroleum or without using a lot of water to grow cotton? Can we do that with agricultural waste? How do we recycle things instead of just throwing all of our plastic away and it being wasted? So there's a lot of areas that we're seeing innovation every day. We see a lot of scientific effort going into those things, and it's great. And occasionally a few of those will I'll say that's actually a good business too, and we'll invest in those. But batteries are tough to invest in. I love batteries on the technology side, and but as an angel investor, so to take a battery to market it kind of starts at like $10 million. So my small check's not going to make a big difference. They really need the grants. They really need, focused VCs that can write $1, $2, $5 million checks. So it's except for a few drop-in replacements for existing things like battery separator or a way of making graphite that makes better battery electrodes than the existing way of making graphite. Those are investable, but most of kind of the big inventions there are just going to it takes $100 million to bring it to market. It takes something between 500 million and $1 billion to make a production plant for batteries at any sort of scale. So my little check's not going to make much of a difference there, even on the commercialization side. So that's a little bit frustrating. That I think that's the most important thing, but I really can't do much to invest there. But I do what I can, and I mentor the companies, even though I might not invest in them. And then there are other areas that are easier to invest in, things like water purification.
Yeah, it reminds me very much about on drug development. The first business case I calculated was 2006, 1 billion. And I also thought, where is the investment case for a business angel back in 2006? Now the industry looks a little bit different. There are more service partners on the market, more partners where you can outsource work, but it's still pretty much expensive. And the business angel, I think the only viable option that I often see is becoming a co-founder, but then you can only do one or two businesses at the same time.
That's right.
And
yes.
You get a little bit of return when you attract venture capital and get some service fees or salaries. Then you can at least redeem your initial investment and have, practically speaking, a lottery ticket on a big win further down the road.
Yeah.
When we look at the battery urgency and stay a little bit with climate change, did you look at the Norway case in that respect? Wind, solar, and how they store energy?
No, I don't have much expertise there.
They are doing it's quite interesting. Because I said I mean I live in Austria, so we don't have the ocean close by, and wind is unreliable and sun is unreliable. There are many cloudy days. So I always said wind and solar won't do the trick alone. So we need something in between. Battery is one solution, nuclear is another solution. But Austria doesn't like nuclear power plants, and then I get the argument back. Look at Norway. They are 100% on renewable energy, wind and solar. And I thought, how do they do that? And looked at that. And the interesting thing was they use small lakes. And with wind and solar, there's always the problem when there is no wind or when the sun is not shining, you can't produce energy. They just pump the water up back into the lakes and then can use it again to produce energy. This is quite an interesting concept.
Yeah. So that's called pumped hydro, and that's been around a long time. It's and you do that where you can. It's very effective. There's just not many places where you can actually do it, where you can actually move the water up and then move it down again. But I've seen some interesting startups that are kind of working on like the same concept, like. One is using oil wells, especially U.S. oil wells, where they're doing fracking. There's only enough oil in them to last for about 3 to 5 years, and after that, you have an empty oil well that legally you have to close off and protect from methane escaping. So that's an expense for the company, and they're saying, well, we've got this 2-mile pipe. Let's use that. We'll put a weight in it, and we'll when we have extra energy, we will lower the weight. We will raise the weight, and when we need to generate power, we'll lower the weight, and that will turn a turbine. So the same basic idea as pumped hydro, but we're going to use these 10,000 empty oil wells that are sitting out in the ground right now, and use it that way. There's also like salt formations that where there's been mining, and now they have these places where you can pump carbon dioxide in there, same way. And then when we need energy, we can we can have the carbon dioxide run a turbine. So a lot of things along that path, but the question is the cost. How much does that cost? And so it would work in Norway. Because I think Norway is in particular a high tax environment, high cost of living. People are willing to pay more for renewable energy. Meanwhile, they get most of their money. The government gets most of their money from selling oil in the North
Yeah.
Sea and selling that around the world. But we won't go there. Um, but the company, the country, and the population is very environmentally conscious and wants to use green energy, and that's great. America is not that way, and we're going to look at that and say, yeah, but we can just get gas out of the ground. We can burn the gas, and we can generate power at 3 cents a kilowatt hour. Why are we going to spend 50 cents a kilowatt hour to store energy when we've got all this gas? So a lot of times it just comes down to cost. And that's where, again, I think Europe in general is further ahead and willing to say, yeah, we're gonna charge more for the price of petroleum, so that kind of forces you to other solutions. Except, as you said, sometimes that they say, well, we're going to open our new plant somewhere else where it's cheaper instead of doing it in Europe.
Yeah, I totally agree. I think you mentioned energy, electricity. I think electricity is one of the growing areas in the next 2 or 3 decades. When I look at
Hmm.
all inventions of today, they all they all need electricity. So there is no invention, I think, that's not running on electricity anymore. When we replace all cars in Europe and the United States with electric vehicle, I mean, the demand is simply growing. When I look at artificial intelligence, the chip industry, the number of chips goes up. When I think back, I mean, I was born in the 70s. In the 70s, we needed electricity to turn on the light and to cook
Yeah.
and to wash the dishes, and that's it. Now you have, I think, per person, what is the chip density? I mean, you have an iPhone, you have a smartphone, some tablet, computer or two computers. The car is completely reliant on electricity, so the demand will go
Yes.
up, and I think this is a huge opportunity still.
That's a huge problem. Yeah. And that it's a big regulatory problem in the US because we need long distance power lines to connect the different areas. And that needs permits, and that causes fighting. And so it takes something like 10 years to hook up a new power plant. And that's just insane. Why aren't we doing that faster? I think Europe has similar problems of, okay, now you have to go from Austria to Germany to the Czech Republic or something like that. And now you're crossing different countries, which means different power companies, different regulators, different regulations. And so that adds a different layer of complication.
And complex. The company who solves trading electricity across borders,
Yeah.
jurisdictions, distances, I think they will make a good business. They will really, really
Yes.
make a lot of money.
Well, the
When
first one that did that was Enron. They made a
okay,
lot of money. Still,
was Enron a success case?
they were until they started trying to find ways to make more and more and more money, and then they got fraudulent. At the beginning, they were actually pretty successful
Yeah.
with energy trading, um, but
Never,
then yeah, then they went overboard.
never trade trust. So this is a
Yes.
big problem.
Yep.
When we move a little bit forward in our conversation to writing, you are an ambitious writer. You wrote two novels. Uh, but the third book was about Japanese culture. Yeah.
So
Uh,
my first book, which was published 25 years ago, was I lived in Kobe, which is part of the western part of Japan. So Osaka, Kyoto, Kobe, and a little bit Nara is kind of a separate area of Japan from Tokyo area. And the culture is a little bit different, and most importantly, the language is a little bit different. So it's like the difference between British English and American English. And so imagine you're a language student, you're living in Kobe, but maybe how different is Austrian German from German German?
oh, very different. Very
Yeah,
different.
okay. So somebody wants to learn German, but they go to study in Vienna, and what they're learning at the language school is the German German, right? Because when people say I'm studying German, that's what they study. But then all around them, people are that's not what they're talking, right? That's not how they're speaking. It's grammar is the same and most of the words are the same, but it's different. And so it's the same thing. I was in Kobe, I was learning Tokyo Japanese because that's standard Japanese. and everyone around me was speaking the local Western Japanese. And so it drove me crazy. There was no internet then. This was a long time ago. So I started making my own little dictionary of all the words I didn't know and all the expressions I didn't know. And then I realized, well, there might be, I'm not the only person here that's confused by this. There's no other way of learning it. So I had a friend who knew a major book publisher publishes language books in Japan. So I told him about that, and they're like, "Oh, it's a great idea." And so I myself and a co-writer put it together, and we did that. It was 25 years ago. It's still in print now, and still sells. Actually, it still sells more copies every year than my novel.
Yeah, it needs another 25 years probably on the market.
Yes.
When your new book, what inspired you to write the new book? What inspired the plot of the new book?
So my first novel was this one, To Kill a Unicorn. This is about Silicon Valley. I've always wanted to be a novelist. I've always written short stories, but at some point in my career, I had to say, do I want to be a writer or do I want to be an engineer? And I thought, engineers actually get paid, writers don't. So, and I thought, well, if I'm an engineer, I'll actually be out in the world. I'll have stuff to write about. The problem is I didn't have any time to write, between being an engineer and then having a life and then doing startups, my life was pretty busy. So when the last company was sold, I thought, I want to take a little break. I don't want to do another startup right away. What do I really want to do? So I want to get back into climate tech. So I want to do investing, but I don't want to do investing all day, every day. It's not a full-time job. What do I want to do with the other half of my time? Well, I want to be a writer. So I started writing articles about all the mentorship things, all the startup things, but I really wanted to get back to writing a novel. And well, what do I know? I know Silicon Valley, I know startups. So and no one else is writing novels about those things. So I sat down and I spent 3 years writing To Kill a Unicorn, which is about a startup in Silicon Valley that is kind of based on Theranos and doing some bad things. And one of the employees is missing, and his friend, who's a hacker, wants to find him. So I wanted to write a fiction book, a mystery book that was really not from somebody who doesn't know Silicon Valley and doesn't know the world of hacking, doesn't know the world of programmers, and doesn't know kind of what it's about, and kind of just sees it from the outside. I want to write it for people who are actually in this world and will appreciate it. So I think it's a little bit too technical. There's too much detail in there for people who don't know anything about the startup world and about Silicon Valley. But for people who do, it's just like, I tell people, the most fun you'll ever have reading about Silicon Valley. So I finished the first one, and I was, I was quite proud of it. And I said, okay, well, what's next? And so I really enjoyed writing about the characters, especially Ted Hara and all of his challenges, and then his girlfriend and their kind of difficult relationship with each other. And I said, well, time for another murder. Except one of the things that one of my other kind of pet peeves besides climate change is personal privacy. I'm not a huge advocate there, but I'm really concerned about how the government feels like it has a right to all of your information. Again, Europe, very different from the US. US, basically, we say, well, there may be murderers, child pornographers and terrorists out there. And so the government needs the right to see everything. And so basically, the CIA and the NSA and other groups can get, or at least used to be able to get to everything that you do. And then one day, Apple came along and said, no, we don't like that. We're going to change our security policy so that only the sender and receiver have the keys, and you can, the data may be stored on our cloud, it may be on our phones, but unless you have the password, we can't get it. And that got the FBI so angry. And they said, well, how are we going to stop terrorists? And, Apple, as with Steve Jobs, I think, said, yes, that's a problem, but so is you having access to everything. And so you want information, you're going to have to get it from the users. And there's been a few court cases about that, and the FBI has tried to force Apple to put some backdoors in its code so that the FBI with a warrant could have access to everything, and Apple has kind of said no. And so everyone's kind of waiting for another case where the FBI is going to try again and force Apple and Google now and Microsoft now to change their security policy so that they have access to everybody's information. And so I thought, well, what would cause that? What would get people willing to give up their privacy? And the answer was terrorism. What is going to make people I mean, that's what it was after, after the 9/11 attacks. And we basically said, government has access to everything because we need to protect. And protection is more important than personal privacy. So now we're in a different environment. It's 20 years later. What's going to get people willing to give up their privacy again? Well, it's either murder or major murder case that's in the news or a terrorist threat. So that was the basis of the story. But I need to make it exciting, right? People don't want to read about politics. People don't want to read about personal privacy. They want to read about my friend is missing and a bomb's about to attack, and how do we stop them, and how is my main character going to stop them? So Ted Hara was already ready, my favorite hacker, and he's going to figure out, he's kind of hapless. He doesn't really know what he's doing. He thinks he does. He's young, he's a little bit immature, but his girlfriend is a lot more mature, and she's going to tell him what to do. And so just had that dynamic there and wanted to create the next story. So this one is much more. So the original story, To Kill a Unicorn, is kind of this crazy Silicon Valley, like HBO Silicon Valley story about startup founders and all the craziness of Silicon Valley. The new one, which just came out a couple months ago, Countdown to Decryption, is much more of your standard cyber thriller. A bomb's about to go off. The hacker main character has to try to find a way to stop them. Ends up, the police are going to try to pin it on him. So same characters, same setting, in Japantown of Silicon Valley, but kind of very different styles.
While I was speaking, there's a lot of information in the biography of Tim Cook about Apple and privacy and their fight against FBI
Right.
And the CIA. It's quite interesting to read.
Yeah. Okay. So that was kind of the basis of this novel, and what's going to be the next round between Apple and the CIA.
It already became reality in Austria a couple of days ago. Did you read about the Taylor
No, I
Swift
haven't.
concert last week?
Oh, yeah. The threat of a terrorist attack at her concert. Yeah.
Yeah. And the US Secret Services informed the Austrian
Right.
authorities about the terrorist attack. And in Austria also, we were very serious about privacy. And so this was the reason why our authorities had no chance to discover that.
Right.
So it's needed, my opinion is, my personal opinion, Taylor Swift is a national symbol for the United States, and there would be nothing worse than a terrorist attack on a concert of a US superstar. And my reasoning why the US government cared about Austria in that respect, and they found it, they captured the terrorists, were 3 young boys. And now we have exactly the discussion that you mentioned about privacy, and people are very willing to give it up.
Right.
I mean, is it really so a problem when I think, 99% of people, who cares about them? I mean, they just want to live a normal life, no danger, no crime. Why is privacy such a big issue in your opinion?
It's a good question, because I probably don't do anything that I care that the U.S. government is spying on me or not. But let's put it this way: if there's a backdoor, a way for the U.S. government to get to read all of my emails, that means there's a way for the Chinese government to read all of the Chinese citizens' emails. And there's a way for the Russian government to read all of the Russian citizens' emails. And anyone who, they have thought police there. Anyone who is against Putin wants to say anything bad about the Chinese government. Well, they're not going to be able to get a job. They're not going to be able, maybe they don't go to jail if they haven't actually done anything, but the government's watching. So I have a little bit more trust in the US government, but anything the US government does, every other government around the world will be able to do as well. So the IT infrastructure needs to be as secure as possible. And then the biggest thing is US government can hack in. There's a lot of hackers out there who are better than the US government, and they will find those backdoors and they will get in, and suddenly all the all the hackers will have access to everything. There's just no way to make that work.
I mean, I think the world of 1960 or 1950, I mean, this is the past. I don't think we get it back. And with the internet and the global connectivity, isn't everything transparent anyways?
So communications, things that put out in public are public, but I have an expectation that if I send a message to my wife that the US government and the Russian government and the Japanese government are not reading those and then telling other people about them. And I don't want to be in a world where the government gets to read all of my personal communications. That means there's some bad people that are going to be communicating some bad things, but I really don't like the idea of all of my communications between my wife and my family and my friends can be read by anybody secretly who may not like me for some reason and may decide to, tell some other people. Maybe I have trouble getting a job because, I wrote something like, I don't like this general that I met somewhere, and suddenly I have a contract with the Defense Department that gets canceled. There's just too many ways that information can be abused, and it's been abused, and that's what scares me.
Yeah, I
Plus
mean,
the fact that, again, if the government can read it, there's a lot of smart hackers out there that they'll get to it too, and then all of my financial information will get stolen.
the interesting thing before 2020, I think nobody cared. Then came the pandemic, and everybody started writing everything on Facebook, and so
Yeah.
it's like the honest, the open book. I always, I thought a lot about it, also with the podcast. I mean, when you think about it, what you can do with AI these days. So we put a lot of content out in video,
Mhm.
and you can use voice and facial expression and run an AI against it, trained with
Yeah,
psychology
that's a little
data.
scary.
And you can say, what is this weirdo really about? And when you think back 40 years, when you
Mhm.
met a person for the first time and this person was not trained in psychology or criminology or any other area, it was really the first contact with a person, no information. The
Mhm.
first information exchange was about who are you, what's your
Right.
name, and now
Right.
you know everything already about the
Now,
people.
now it's on LinkedIn, right? It's on
Yeah.
Facebook. It's yeah,
And we are encouraged to post and post and post.
yes, that's right.
How do you see this danger? Is it a danger or is it an advancement of society?
That's a good question. I tend to see every new technology as mostly an advancement, but also creates new ways people can scam you or like Facebook was great because it could connect all the people around the world. You can find new groups if you were kind of a specialist, like you like writing and you can't find any other mystery writers in LA. You could connect with mystery writers in San Francisco or in Vienna. Um, so Facebook was absolutely wonderful, but then at the same time, it's just a huge conduit for misinformation and lies and scams and everything else. So there's good and bad in everything. And can we find ways of emphasizing the benefits and reducing the not so good pieces, and that to me is more of a political problem, not a technology problem.
What? How would you solve it if you were the one in power who can decide how to reduce the risks and increase the benefits? How would your solution look like?
Well, I'd have to write a master's thesis first. I'd have to study it more. Um,
You have
but
to-
Yeah, certainly. I think this goes more towards the European way of thinking of let's have some regulations, let's have some rules. Let's say this is what companies are allowed to do, and this is what they're not allowed to do. Where the American idea is, well, anybody can do anything they want until it gets really bad, and then we're going to make some crazy regulations that don't make any sense. So um, when I talk about political problems, it does mean regulation, and I don't think it's you can't do this. It's um, here's well, for something like that, it is yeah. Here's what companies are allowed to do. Here's what they're allowed. Here's the privacy rules. Here's the subscription rules. Here's the age of people are allowed to do things. Um, but there's no easy answer there, and it's going to evolve and change, and that's kind of the biggest problem with regulators, because regulators like to plan things out for 10 years, and we're going to make this regulation that's going to come into effect in 2030. It's like, no, we need something that stops something going on right now today, and companies can move fast and regulators can't. So that it is a challenge. I will give you that, but I always fundamentally it's kind of strange. I'm mentally I'm much more of a pessimist, right? I'm much more of a let's make sure, I'm conservative, make sure things don't go wrong, kind of see all of the I'm really good at running a business because I can always see all the things, all the problems that could occur and make sure they don't occur. So I won't grow as fast as like crazy people are willing to take lots of risks, but I can make a business successful. Well, the same thing. I'm the opposite when it comes to technology, right? I'm kind of an optimist. I see, yeah, everything there's good and bad in everything, and technology is just a tool, like we started at the beginning. And it's how the tool's being used, and can we, and it's always going to, it's going to improve the world, but there will be people abusing it, and can we find ways of stopping that abuse, whether that is, whether that's regulation, whether that's police, whether that is countries collaborating with each other, and none of that's easy. But we don't want to say you can't improve technology, or else I think we're dead. We always want to be improving technology. We always want to be making the world better, stronger, and we just need to be better aware of the downsides and able to adjust to them quicker.
I totally agree. I totally agree. DC, it's really great talking to you, and time flies. I see that we are
Yes.
more than 2 hours in the conversation. I have one final question to you, but before I ask it, is there any topic open that you would like to tackle before we wrap up and we didn't talk about so far yet?
I do want to go back to the startups,
Mhm.
and what is the biggest adjust myself. My knees are getting a little tired here because I'm not sitting on a chair. Biggest challenge of tea ceremony is sitting on your legs for a couple of hours at a time.
That's true.
Chairs were a great invention. Um, so kind of back to where we were talking at the beginning of what is the biggest challenge for startup founders, and particularly hard tech founders. And I touched on this a bit, but I do want to emphasize that the biggest challenge is that investors want to see a completed product, but startups need the money to get to a completed product. And that is a really difficult challenge. And there's no easy answer to that. Just pitching to 1,000 VCs isn't going to solve the problem, because they're all going to come back and say, you're too early, come back to us, a couple of years when you have some customers signed up. So the solution is being scrappy, figuring out how to do as much as you can with as little as can. Government grants. Got to, especially if you're in the US, got to apply for government grants. They're there. Get them, grab them, use them. They're wonderful. $1 million and a quarter at a time. Use that to take care of the research and development costs. Still going to need a little bit more money. Talk to customers, talk to suppliers, talk to mentors, talk to people in the industry. A little bit of investment, not very much. Don't think you're going to raise $2 million. Like try to raise like 500K. Figure it out what the minimum you need to raise to get you to that next step where you can start talking to investors. And that is the biggest challenge and the biggest misunderstanding I see in the hard tech space. I think everybody puts together a pitch deck and says, I need $5 million. I'm just going to start pitching VCs, and one of them is going to get excited and give me $5 million check, and it's not going to happen. So really need to think through, well, how am I going to survive on 500K plus $1 million or $2 million in grants, and how am I going to get those grants, and how am I going to get that 500K, and who those investors are going to be. And that's not easy. If it was easy, it wouldn't be called hard tech. So it's a challenge. Be prepared for that challenge. If you come into it with the right attitude of this is tough, and I do need to be scrappy, and I'm not just going to find somebody to write a check for $5 million. You're actually going to come out with a better business in the end of that, a more better chance of success. So know that going in, be prepared, be ready, be thinking through it, and then you can be successful. Whereas you don't know what you don't know, and you're just like, I know how to write a pitch deck, I'm going to go get investors. You're going to be you're going to be wasting a lot of time not making any progress. So be prepared, know what the process is.
Yeah, great points, great points. I think a role model could be the drug development process, which is practically a stepwise de-risking process. It's, I think, probably
Yes.
similar to the hard tech problems I heard from my conversation with CERN, that many of their technologies take 1 or 2 decades until they become really useful products.
It's not gonna be fast.
That's true. It's anything but fast. And the landscape in drug development has evolved over the last 2 decades in a way that there are a lot of service partners out on the market that you can contract. So they are not owned by a single company, but they contract many companies, make sure that the patents are not infringed, so that
Right.
they keep this work separate. But you can basically pick the services when you need them, animal trials, for example, or any other thing. And the entire industry, the pharma industry, is organized that their preferred acquisition point or license point is at clinical phase 2, which is not a finished product. But it shows a proof of concept, I would say. It shows that it's effective and it's safe. And I think probably the other hard tech areas, also in the battery space, probably evolve over time in a similar ecosystem. It doesn't solve the problems yet, but I see that the industry must step in much earlier to make something happen in that area.
Yeah. Yep.
The final question to you. You have a lot of investment experience in public markets and as a business angel, also as a startup founder. When someone wants to get into investing, what advice would you give them?
Okay, so I'm going to focus on the new angel investor, and what is the one thing that most of them don't know that they need to know, and the one thing I wish I knew when I was starting. So when I was starting, my idea was every startup pitches and says, we're going to have an exit, we're going to get you a return in 3 to 5 years. And I believed it. And I thought, okay, so here's what I'm going to do. I'm going to invest this many dollars each year. I'm going to plan for, I've got this much to invest. I'm going to divide it up into thirds. I'm going to invest, 1/3, first year, second year, third year. Third year, I start getting returns, and then I can use those returns to start doing investing in new startups. And at least by year 4, there should be more returns. By year 5, there should be a lot of returns. And then, I'll keep some of it for myself. That'll give me a bigger pot to keep investing. And it'll be this nice flywheel that, once I get started, I prime the pump after the first 3 years, I will just be able to keep investing. I was completely wrong. So there's something called the J curve. And the J curve says, your portfolio will do this. So you'll start off with this much that you allocated. You'll put your money in, and your cash, your bank account for investing will keep going down and down and down, and you'll hit 0. At some point, you'll start getting some returns, but you will not get good returns at the beginning. There's exceptions, but at least not for me, not for most people. So at the beginning, you'll have your failures. Your failures tend to come fast, and your successes come slowly, and your big successes come even slower, and your really big successes take a really long time. So over 15 years, you may do great, but at the end of 5 years, you will be down to zero. In year 6, you might get some some failed, but not completely failed. So you get some buyouts. So you get like 50% of your money back. You'll have some 1Xs, you'll have some half Xs, you'll have some 2Xs. You'll gradually get some money back. So that they worked it out that after 10 years, I had broken even. But 10 years to get back to break even. But I still had some companies in my portfolio that hadn't exited yet. So like in year 12, I had my first big exit. And suddenly I was 2X. And I still have a couple companies, 15 years later, I still have a couple of companies left that haven't exited yet that hopefully will give some decent returns so I can get to like a 3X, but it's going to take me 15 to 20 years. But my idea of, well, I was just going to put money in, and after a few years, I'm going to get return. I could use that money for doing new investments. That was completely wrong. So after 5 years, I stopped investing. I continued doing mentoring, but I stopped investing until I started getting some returns, and my company got acquired. So I had more money to invest. So I'm like, okay, I'll put a new pot in here and do some more. So I've had some good returns over time, but it took a long time, and it's frustrating because you just get failure. You have some companies that send you quarterly updates that say we're doing great, and then they run out of money, and you're like, oh. And then you get some that are like, we're doing great, and then they get another round of investment, and they get another round of investment, and it just takes forever. So you do get some good returns eventually, hopefully, but it takes forever. And in the meantime, it's not like public stocks where you can buy them and sell them and get some dividends or even know what they're worth. It's the money's gone, it's out the door. They may tell you they're doing well, but you don't really know until you get a return. That's going to take a long time. So that's my one piece of advice. You're deciding to be an angel investor, be prepared. It's a long road.
Yeah, that's true. Talking about building on what you said, I think the average return rate for an S&P 500 is about 7 to 8% over decades.
Yep.
I recently listened to the CEO of the Norwegian oil fund. He invests all the oil money, diversifies, and in the conversation, he said that he's aiming at 6 to 7% as a good return over time because it's generational and they don't need to have this 20, 30%. When you look at the startup world, there are always these outlier cases who said, I invested once and half a year later, I got my billion back and it was just $1,000. And this motivates so many people to become a business angel. You have a lot of experience, you have seen a lot, you know a lot of business angels. In your opinion, what's a good return expectation?
So I've invested in 50 startups individually and about another 100 more through funds. And then I also I've got member funds, but where we pool money and we invest together. So last year I did an analysis of what my returns were. And the problem is, well, you don't know for 15 years. But I had this interesting effect because I stopped investing for a while. So I had this cohort of investments, like my own little fund, and I could see what my returns were. And I could see also I invested in a couple of returns in a couple of member funds that invested in 30 companies at roughly the same time and what their returns were. And both mine and the Angel Group fund, the return was roughly 7%. And so my S&P funds have done, like you say, probably recently pretty well, so 8 or 9%. My real estate investment has done much better. So if I just want to make money, I could just put it all in S&P funds and maybe some public stocks, maybe do a bit more in real estate. It's just money. That's not interesting, right? So I think you'll find for most. You find some angel investor who's, like you say, they heard about these great returns and they're like, yeah, I'm going to make a fortune. I'm putting in a little bit of money and it'll be a huge return. Most of them are disappointed. I think you find my goal is to get returns so that I can invest in new startups, right? I want them to exit so I get the money back. So I get a nice return that's like 2x, 5x, 10x, and that means I can invest in 10 more startups, right? Or I can invest more in each startup. So I'm doing it because I want to support the companies. I don't want to lose money at it, but the bigger returns I get, the more I can invest in other startups and help the ecosystem. It's not just about making money, and that's why I do that instead of S&P 500 or real estate, which is just strictly, retirement money. So I think you find the people who are serious angel investors, they do it because they enjoy doing it. They enjoy working with founders. They enjoy seeing company success. And it's a way of living vicariously through the startups, and their success is our success. And that's not the way with Apple, right? I'll buy Apple stock and it goes up. I can't say, yay, look how successful I am. Look how great I am. But I put 100K into a battery startup, and then they turn into the next new battery technology. I can say, hey, I was one of the early investors in that company. I'm part of the reason they were successful. I can call up the CEO, and he knows me, and we're friends. And so we do live vicariously through those startups, and that's kind of part of the reason we invest in startups and want to be part of that ecosystem. And a lot of us are founders. It's easier to invest in 10 startups than doing one of our own. And we do want to provide advice. We do want to work with the founders. We do want to be mentors. We do want to be part of the ecosystem. It's not just about writing a check and hopefully getting a return later. It may be different for most people, but I think most of the angels that I know, and there's a lot in my network, we're doing it because we enjoy it. We want to be helpful, and we want to give back to the community. We don't want to lose money at it, but we do want to help the company succeed.
I think it's a good attitude when you see someone with a great idea, help them invest, become a business angel, but with the right expectation that this is not a fast track to a windfall profit overnight.
Right. Yep.
DC, thank you very much for sharing your insights. It's
of course,
thank you. Talking to you.
I had a wonderful time talking with you. Time is really gone by quickly, and I really appreciate you having me on your show.
Sure. Let's revisit in 1 year, or when your next novel is coming out.
That sounds good.
Ever happens earlier. Thank you very much for sharing your knowledge on my podcast, and have a great week ahead.
You too. Take care. Thank you.
See you soon. Bye.